Hey guys, the SEC has declared that Cardano is a security, but that's just a headline. I did my own research, looked into the SEC's claims and the Cardano token sale, and found some very important information for all Cardano holders. Is ADA a security? What is the SEC hiding? And what can we expect from Cardano in the near future? Let's get into it. In this video, we'll look at the history of the Cardano versus SEC standoff, dig into the documents, and I'll show you some things that every Cardano holder should know. First, let me bring you up to speed. In a lawsuit against Coinbase and Binance, the SEC defined Cardano and 12 other assets as securities. And while Ripple almost won in court, that doesn't mean that ADA, Sol, and other assets will win as well. So I decided to see what Cardano's chances are in the war against the SEC. Let's start with the most popular tool that the SEC constantly refers to, the Howey test. This test is used to determine whether an asset is a security or not. So let's turn to the primary source first. In the complaint against Coinbase, the SEC alleges that Cardano, a company founded by Hoskinson and Wood, conducted a token sale in which they sold approximately 25.9 billion ADA in exchange for Bitcoin at an average price of 0.0024 per token, raising approximately $62 million for Cardano. The information publicly disseminated by Cardano, IOHK, and Emergo, including since the initial sale of ADA, led ADA holders, including those who purchased ADA since November 2017, to reasonably view ADA as an investment in and to expect to benefit from Cardano Foundation's, IOHK's, and Emergo's efforts to expand the Cardano platform, which in turn would increase the demand for and value of ADA. In other words, the SEC is accusing ADA of selling tokens through ICOs to investors who apparently bought the coins with the intention of selling them at a higher price. In fact, the SEC is right, because one of the criteria of the Howey test is the sale of assets from which the investor expects a profit in the future. But there are two important nuances that completely change the situation, and you should be aware of them. First, the ADA token sale took place under the supervision of Japanese auditors. I even found this audit in the archives, especially for you. Here we can see that the ICO took place under the supervision of the Japanese company Attain. Participants of the token sale had to pass KYC in order to buy tokens. Here we should be careful. The article does not say anything about American citizens, but most likely ADA tokens were not sold to Americans, and therefore it does not fall under the criteria of the Howey test. Second, the audit says that during the ICO, investors did not buy Cardano tokens, but vouchers for which they later received ADA tokens. Moreover, the sale was for Bitcoins. And if we turn to the Howey test, we see the criterion here. An investment contract exists when there is an investment of money in a common enterprise with a reasonable expectation of profit to be derived from the efforts of others. In fact, it says that the asset must be purchased with money, but the ADA was bought with Bitcoins, and Bitcoins had no legal status as money then or now. It's just numbers on a computer. For these two reasons, the SEC can't come after Cardano for selling ADA as an unregistered security. Bottom line on the first point, the score is 1-0 in Cardano's favor. Guys, I know a lot of people watching this video came here via search. I really appreciate that you've chosen mine among dozens of different videos, so I have prepared for you very interesting and useful information for Cardano holders, but give this video a thumbs up too for my efforts. Let's now take a look at the recent SEC court hearing in the case of Coinbase, which took place on July 13th, right on the day of Ripple's victory over the SEC. Let's break down a very important talking point that all Cardano fans need to hear. This was covered in detail by my YouTube colleague Crypto Capital Ventures in his recent video, but I will only touch on the main talking points. The judge began with a clarifying question to understand the essence of the claims. Just to that point, sir, on what level are you asking me to focus? Are you asking me to focus on the assets themselves or what's being done with them on the Coinbase platform? To which the SEC started talking about the fact that Coinbase is trading assets that fall under the Howey test and were sold as investment contracts and so forth. The judge answered very clearly, and it became clear whose side she was on and how it was going to end. But there's a question about the effort that went into the underlying crypto assets. I think that's where the defendant's arguments may have some traction. In fact, the judge sides with Coinbase, which means that the SEC's chances of winning are very slim. Finally, the judge finished off Gary Gensler and his company. It is not crazy in the phala sense for Coinbase to think that they were doing okay, because that is exactly what you allowed them to do when you issued the S1 IPO registration. The judge pointed out that the SEC itself allowed Coinbase to go public when ADA and many other altcoins were traded on that platform. So the scoreboard became 2-0 in favor of Charles Hoskinson's team, as Gary Gensler did not prepare well for this match. Well, we are moving on to the third half where everything can be resolved. As you already know, Ripple actually won its case against the SEC on July 13th, giving hope to many altcoins, especially Cardano. Let's look at this situation from the perspective of the ADA token. Judge Torres ruled that XRP tokens sold through an exchange are not securities, but tokens sold through a token sale to large investors are. For example, ADA was sold directly through an ICO, so it can be considered a security. But at the beginning of the video, I explained why this is not the case and what the main nuance is. Although I agree with Preston Byrne, at the end of the day, the actual token common law in the United States is pretty sparse, consisting mainly of a handful of district court-level decisions of limited precedential value. It all depends on the judge and the Cardano's lawyers. Ripple Labs spent about $250 million over 3 years to win against the SEC. What do you think? Will Ripple want its $250,000 victory to be used by other altcoins and its competitors? I guess not. Therefore, I will not jump to conclusions regarding Cardano. In this round, the score remains unchanged and Cardano goes to the locker room with a score of 2-0 against. However, the game is not over yet. Traditionally, let's take a look at the chart of Cardano and assess the immediate outlook. On the 4-hour chart, we see the triangle exit and a retest. I expect a local decline to 30 cents, after which a local growth to 40 cents can begin. The daily chart shows it more clearly, the retest of the blue zone and the growth of another 60% maximum. In the near future, I did not expect strong movements on Cardano. We are still trading within a local sideways trend and it is likely to continue until the end of the year. There is a triangle forming on the weekly chart which may be broken through closer to October. Then something similar to an alt season may begin. In the meantime, be patient. And that's all for now. Thanks for watching. Your Coin Post.